I want to turn overseas for a moment and on to real estate. As we've been mentioning throughout the show, we've been trying to get Gary Garrabrant with us. He is now joining us on the phone. He is Zamcel's basically right-hand man investing in emerging markets throughout the world. And Gary, I know we've been trying to get your camera shot up, but we haven't been able to, so I appreciate that you're on the phone with us.
Absolutely. Good morning, Betty.
Okay, and Gary, you and I have talked quite a bit, of course, about the Brazilian market. I know you're at the Bloomberg Link event, which is focused on investments in Brazil. On the housing market in particular, I just read really quickly that Gafisa, which is the third largest home builder, one of the companies you helped take public, their profit tripled in the fourth quarter, but their stock has fallen about 16% this year. Is that a sign that investors are now worried about a bubble in the Brazilian real estate market?
Betty, I wouldn't attribute the Gafisa or any of the other public company share prices to the state of the housing market here in Brazil. The effect really of the new accounting rules, IFRS, and how cost of or progress of completion versus revenue is attributed. That's really the confusion, and we anticipated this back 12 or 18 months ago when this new IFRS rule was announced.
Okay,
you made an earlier point about the distinction between home builders in the U.S. doing better than the housing market. In Brazil, it's the opposite. The housing market is very strong. The home builders, particularly publicly traded, particularly liquid companies like Gafisa, are feeling the effect.
I see. Okay, so it's more down to that, Gary. But tell me a little bit, though, about, the fact of the matter is that their profit tripled. So there is this demand out there, this housing demand out there in Brazil, which is why you're there. But there's still talk, though, that we may be reaching these points, these peaks in the housing market. Are you seeing any of that in some areas in Brazil?
Well, Betty, it's an interesting question. We were in London last week and are aware of a property, One Hyde Park, where at least one apartment has sold for £100 million. One apartment.
Wow.
Okay, so if Sao Paulo is entering the sphere of global cities where people want to be, Sao Paulo's got a long way to go before it gets anywhere close to New York or London. In certain neighborhoods, certainly in Rio and Sao Paulo, there's excess demand for land. But out in the regions, and appreciate there's a couple hundred cities of relevance in this country, not two. And for us, I'd say we're most excited about the regions at this point.
Right.
And appreciating Brazil as akin to the lower 48 states in the United States,
right,
where there are distinct geographic regions. And there's still terrific opportunity, particularly in the middle-income sector.
Okay. And Gary, right before the break, we were talking about whether or not this market has more room this real estate market has more room to grow. As a new investor, you've been in it many years, but as a new investor, when you go into Brazil, are you going to make the same outsized returns that you made several years ago in Brazil? Well,
Betty, I think we're entering the next phase in the development or the evolution of Brazil's real estate industry. The first phase was characterized by certainly lower-hanging fruit in the form of home builders and the regional shopping center companies that could be acquired and consolidated. Mm-hmm. We're now entering a more sophisticated phase where the opportunities become more regional in nature, recognizing, again, Brazil as akin to the lower 48 states in the U.S., with strong regions. Recall, this is a country of 195 million people with very strong fundamental demand for things like middle-income housing.
Right.
Same in the retail sector. Areas like convenience retail, utility retail just doesn't exist. Our most recent investment, which I think is emblematic of this idea in the self-storage sector, which we see terrific growth opportunity. Our company has properties. We established the sector here in Brazil. In the U.S., there's something like 35,000 properties.
Oh,
so
wow.
Brazil's got a long way to go to catch up.
So as you're looking at the second phase, this more sophisticated phase of the real estate market, then what are the risks, or what's the major risk then?
Well, I think the risk continues to be, as with all emerging markets, alignment with highest quality partners. that's always the challenge and a barrier to entry in all of these locations.
Okay.
And honestly, that's always our focus is seeking out establishing relationships with the highest quality operating partners on the ground.
Right, Gary, we've talked about that quite a bit. Before I leave you, though, Gary, just last time we talked in February, you were putting some of your long-term plans on hold in the Middle East because of what was happening in Egypt. Now we have more turmoil throughout the region. What's the update on your business there?
Well, it's a very interesting question. We were in Paris last week, actually visiting with a prospective partner who is very active in Morocco, which is a country that we've been evaluating the last several years. And there's a terrific opportunity in Morocco. It's a country of scale, 40 million plus people. Again, unmet demand for housing in the several millions of units. And again, this isn't glamour. This is high utility housing, leading to retail property. Same kind of idea that we've capitalized on in Latin America. Businesses emanating from the growth of the middle class.
All right.
And Morocco has great new leadership, and we're evaluating it in political terms, but our sense is that we can view it as more insulated than certainly the countries to the east.
Okay, all right, well, you heard it here first then. Gary looking in Morocco as perhaps the next market there. Gary, thank you very much for joining us. Appreciate it. Gary Garrabrant, the CEO of Equity International, joining us from Sao Paulo.